Today we will be going over some of the basics of using candlestick charts. Everyone has seen a conventional line chart before, but the candlestick chart gives us a lot more information. Candlestick charts are nothing new, as they have been in use for close to 300 years. Learning the basics of candlestick patterns will help you to become a better stock market trader. Candlestick charts are often daily or weekly charts, where the candle represents a trading day or a trading week. The actual candlestick is the thin line showing the trading range for the time period. On a daily chart, this is the high and low of the stock that day. The wide bar, or real body, of the candlestick shows the open and close price of the stock as well as the difference between them. The color of the real body indicates whether the stock closed higher or lower than the open. A daily candlestick chart will give you a snapshot of the performance of that stock for the day. The real body shows the opening and closing price, and the height of the body shows the range between the open and the close. If the body is black or red, depending on the chart, that means the close was lower than the open. If the body is empty or white, that means the close was higher than the open. If there is no body and just a thin line, the close is identical to the open, and this is known as a doji. We will talk about this more later. The thin candlestick lines are also known as the shadows. Using the traditional candle terminology, we would consider this to be the wick of the candle. These shadows show the high and low prices of the trading day. A long upper shadow on an up day shows that the close was far from the high. A short upper shadow on an up day shows that the close was close to the high. A long lower shadow on a down day shows that the close was higher than the low. A short lower shadow on a down day shows that the close was very close to the low. The candlestick gives you a snapshot of the entire trading day. The patterns among multiple candlesticks are used by technical stock traders to predict price movements. Fundamental traders often use candlestick patterns to determine optimal entry points on a position as well. Technical traders make trading decisions based on charts and data. Common indicators include candlestick charts, simple moving averages, Bollinger Bands, and more. Fundamental traders make trading decisions based on the fundamental strength of a company. They spend their time reading earnings and financial reports and researching the board of directors. Understanding candlestick charts is useful to both the technical and the fundamental investor. Now that you have a basic understanding of what candlestick charts are, let's look at a few basic patterns you should be familiar with. The first one is the doji. This pattern forms when the open price and the close price are virtually the same. If the upper and lower shadows are longer, it becomes a long-legged doji. Depending on where the doji is seen, it either represents indecision or it may signal a reversal of the current trend. A doji at the bottom of a downtrend or a doji at the top of an uptrend is an important signal to pay attention to. A doji can also represent a time that buyers or sellers are gaining momentum for a continuation of the current trend. A long-legged doji is a more dramatic version of the traditional doji. It says that the prices moved far higher and profit-taking kicked in. After profit-taking sent the stock lower, bulls saw this as a buying opportunity, and this returned the stock to the open price. A long-legged doji should be read the same as a doji. The next pattern is known as spinning tops. This is a series of candlesticks with small bodies that are similar or equal in size. Often, they will alternate from closing higher one day to closing lower the next day. Spinning tops are similar to a doji because they represent indecision. Oftentimes, a spinning top can be a near doji where the body is very small because the open and close price were almost the same. Spinning tops are often a sign of indecision or a period of consolidation where the buyers or sellers are building momentum for the continuation of a trend. The next pattern is bearish or bullish engulfment. A bearish engulfment happens when a white candle is shadowed by a black candle that mirrors the previous day. The longer the body, the more bearish the pattern is. A bullish engulfment happens when a black candle is shadowed by a white candle that mirrors the previous day. The longer the body, the more bullish the pattern is. A bearish pattern indicates the stock will likely go down in value, and a bullish pattern indicates the stock will likely go up in value. Bears attack with their claws in a downward motion. As such, bearish investors make money from falling stock prices. Bulls attack with their horns in an upward motion. As such, bulls make money from rising stock prices. The last candlestick pattern we will discuss is the hammer or the hanging man. While the candle itself is the same, the placement of the candle determines the signal. The candlestick looks like a square lollipop. The stock opens, trades lower than the open, forming a lower shadow, and rallies above the open to close higher. When this pattern is seen at the bottom of a downtrend, it is called a hammer. This bullish reversal pattern indicates the downtrend may end and the stock may begin forming a base or go into an uptrend. When this pattern is seen at the top of an uptrend, it is called a hanging man. This bearish reversal pattern indicates the uptrend may be coming to an end and dark days may be on the horizon. There are countless resources and books about candlestick patterns. These are just some of the basic patterns to recognize. If you are trading solely based on chart analysis, make sure you are using other technical indicators as confirmation. You don't want to rely solely on one indicator. Thank you all for watching this video on candlestick charts. If you are looking to learn more about investing in the stock market, I do have my beginner's guide to stock market trading that I will link to in the description. Please drop a like on this video if you enjoyed it and subscribe to be notified of any future uploads. Thank you for watching.